Welcome, guys. Today we are going to be looking at a very important concept in trading. As a trader, you need to understand this concept to, lighten up your trading experience. And sometime or somehow, as recourse to you being profitable, the knowledge of this concept we are about to unveil to you guys is very, very, very important. It plays a major role in your ability to understand decisions to make, which invariably also have to do with your ability to become profitable. Because when we talk about being a profitable trader as well, there is also your sources as a trader matters a lot. All right. So in order for you to succeed in this, especially synthetic traders, you need the concept that we are about to unveil to you now. And that is the concept of what? The higher time frame versus the lower time frame. Okay? We want to understand how the higher time frame relates with the lower time frame, and what are the difference between these two time frames, or how important they are to us as trader or as an analyst. All right. So having said that, without wasting much of our time, we are going to look at what it's all about. All right. The chart before me is the chart of volatility 75 1x. All right. That is the chart of volatility 75 1x. So we are going to talking about the higher time frame. So what do we mean when we say higher time frame? All right. Higher time frame is basically the time frame that range from 4 hour down to probably weekly or monthly time frame. Okay. So we have the 4 hour time frame, the 8 hours, the daily time frame, and the weekly time frame. Me personally, when I want to look at the higher time frame, the time frame I majorly use for my analysis are from what? The daily time frame, the 4 hour time frame, and sometimes the 8 hour time frame. All right. Now, how important is this time frame to us? The higher time frame help you to know the order flow in the market. All right. It tells you or gives you information about where money is flowing to. All right. The direction of money flow. That is what the higher time frame provide you. The higher time frame provide those information. Okay, so for you to understand the overall bias or the overall order flow of the market, you need to go to your higher time frame to check what the market is doing per time. And you need also to, it is the higher time frame that will probably tell you the structure that needs to be broken, or the structure that needs to be respected. All right, before you can be able to, although there are structures on the lower time frame, but the higher time frame structure all the time, or most of the time, if I am not being biased, play more significant role than that of the lower time frame. Okay, so you need to understand what the time frame is saying. The higher time frame, like I said, the 4 hour, the daily, you need to understand what they are telling you before you can navigate down to the lower time frame. When you don't want to go to open your chart and then probably go to the 1 hour time frame, or the 15 minutes time frame, or the 10 minutes or 5 minutes, and start marking out your support and your resistance. No, you don't want to do that as a trader. So what you will see whenever you make such mistakes, I don't want to call you mistake, or maybe probably you're ignorant of this information, and you scale down to your lower time frame to mark out your support and resistance. What you will experience is that you will see the market breaking through those things, and you'll be like, oh, what is happening? I thought there's a resistance here, there's a support here. Why is none of these things respecting it? Why is price not respecting this particular zone? That is because you mark them on the lower time frame. All right. So for you to have a stable zone that you at least you can tell that there are significant assurance that price is going to respect those zones or react perfectly well to those zones whenever it gets to, you have to mark those zones on the higher time frame. So what other information that higher time frame provide for us? I told you it helps us to know the overall bias of the market, and it also gives us what? Point of interest. What do I mean by point of interest? These are the points you want to pay attention to. Some people call it area of value or turning point. Some people might call it significant zone. Like they can call it, but what it simply means is that they are the points they are looking out to see the market making changes. All right, they are points where they can expect a reversal or a retest. Yeah, those are significant points that they can even be willing to make entry from those points after putting every other condition in place. Okay, so the higher time frame help us to spot those important points, and it also give us the information of what the market is doing overall. Yeah, it gives us the information of what the market is doing overall. So what I have before me here, you can see some horizontal array. So those things that I've marked here, they are significant point that whenever I see the market coming towards that point, I want to see a change. And if you can observe clearly, when you see this point, I need to zoom out a little bit so that you can understand what I'm saying clearly. When you look at this point, from this particular area, you see what happened the moment the market comes to those particular level. All right. So those are important level that, or important points that I want to look at. I want to look at what will happen there. So for example, when the market comes to this place, there is a little retracement to the downside, and the moment the market breaks through it, what happened? You see this doji candle, and this particular one come back as a retest to test it. But even though, if the retest to you is not clear, you look at this point, what happened? The moment market come to this particular zone again, you see the massive push to the upside. Okay, now currently the market came to that particular zone again, and what are you seeing right now? You see the market trying to respect that particular zone. So it's an important zone that I want to look out for. All right, I want to look out for those zones. Look at this particular zone as well. What happened? You see this doji touches this horizontal line, and you see that there was a little buy. When you scale down to the lower time frame, this small buy, this 1, 2, 3 candles that you're seeing is going to give some people might catch some traders, although it is not advisable to trade against the trend, because if you are taking a buy on this, it means you are counter trading. When you gain experience to some certain level, you can do that. And if you do that, you'll be able to catch some move on the lower time frame. All right. But what I'm saying is, when you see that this zone was breaking, what happened? The market came all the way up again, and once it tested the zone, it crashed all the way down. Same thing is applicable to this particular level. So the higher time frame help us to understand major zones. It helps us to spot major zone, major turning points in the market. Okay, so that is that about the higher time frame. Now we're going to look at the lower time frame and how you can merge them together while making analysis. Okay, this is the 15 minutes. Sorry, this is the 1 hour. I've stepped down to 1 hour. This is the 1 hour of that same index, volatility 75 1x. All right. So the importance of the lower time frame, the major importance of the lower time frame is that it helps us to spot entry. Why the higher time frame give us the overall order flow in the market? The higher time frame, what does it help us to do? It tells us where we want to join this move. It tells us when we can join this overall move that is happening in the market. Okay, if you don't want to make entries on the higher time frame, you want to make your entries on the lower time frame. Reason be that when another importance of using the lower time frame, sorry, is that it gives you good risk to reward ratio. Okay, it gives you good risk to reward ratio. I told you that it's a point of interest that helps you to what? Make entry into the market. The lower time frame is very, very, very important. For example, if you want to make an entry on the lower time frame, on the higher time frame, probably you want to short the market from here. You want to take a short from here down to this place. Maybe you want to put your stop loss somewhere around here. Like, the thing is, just look at it. You just have look at your reward. Your reward is very low. All right, your reward is very low, and your stop loss is, the reason is because you have a very large stop loss. And risk management is very, very important, and we need not to expose our account to too much risk. So one of the things that the lower time frame helps you to do is it's tighten up your stop loss. When you scale down to the lower time frame, you reduce your stop loss. All right, so look at what you're having here. You're having a reward ratio of what? 1 to 2. Now let me go to the 1 hour and still make that same entry. Oh, sorry. Let me scroll down to the 1 hour and still find a way to make the same entry. Okay, now when you look at this place, we have an advantage of what? Structure, because we understand that this is a structure that got broken by the market, and what we are seeing currently is that the market tend to scale all the way to this place for what? To retest that particular broken structure. So we have an advantage of structure. So if you're making entry from here, if you're taking a short from here, probably we want to put, yes, we are just going to put our SS slightly above the structure. All right, now look at what we have. We have 4. Our reward has increased to what? Our risk reward has increased to what? 1 to 4. Can you see? That is almost times 2 of the entry you are making, on the higher time frame. So you don't want to do that. You don't want to take too much risk or expose your account to too much risk. So what you need to do is what? You scale down to the lower time frame to spot your entry. So how do you merge these 2 time frames together to give you great job, like to give you great setup as an analyst or a trader? Now, when you scale to when you are on the lower time frame, you will notice that when you're on the higher time frame, one of the things you will notice is that the higher time frame does not have much information to give you as regard to what is happening in the market. Okay, because when you look at this particular page, we just have few candles here. You may not necessarily tell what to do. Let's assume that because you consider this place as a very strong support, and now that the market is reacting to it, we want to make an entry. We don't have much information here, but when you come to the lower time frame, what you just need to do is mark out this zone. When you mark out the zone, go to your lower time frame. For instance, I'll use 1 hour as my lower time frame. But meanwhile, whenever I make my analysis, I start from the higher time frame. I mark out my important levels, support and resistance, try to check the order flow, what is happening. And after I've taken down those information, I will go to the 4 hour to also know what the 4 hour is doing. I will ensure I will be able to distinguish if the 4 hour is in alignment with the daily, or the 4 hour is against what the daily is saying. I will be able to pick out those two pieces of information, hold them, then scale down to my 15 minutes, which is what I use most of the time. I use 15 minutes as 5 minutes as my entry time frame sometimes, but not always. I use the 30-minute at most, which is once in a blue moon. I make use of the 1 hour, right? So once I am able to do that, I will now come to the lower time frame to start looking out for where to enter from. So how do I make entries? Whenever I come to the lower time frame, whenever I come to the lower time frame, and let's assume that the market has already started rallying from here, and let's say this is a major level that I've discovered. This is a major level. Okay, so I have it in this form. What I can see is, for me to make entry here, I'll be able to draw a trend line, because I can see that I need other information from the lower time frame to add to my piece of information that I already have. I need to draw a trend line here, all right? I need to draw a trend line here, and then look for, there's a concept. I will still make drop a video or a content on the concept of transition in the market. There is a concept that it helps you to know when the market want to transit, or probably break structure or change or reverse to your desired direction. I will still do video on that. So please, if you don't want to mix out, make sure you subscribe to it, and don't forget to hit the like button. All right. So once I draw my trend line, I also have to look for lower time frame structure that is being broken. All right. So what I have right now is that there is a shift or transition that has already taken place in the market. On this particular time frame, says 1 hour, because structure has been broken. And what we have next is there is a retest to those structure. The next thing I will now have to put in place is my candlestick knowledge. All right, I've talked about candlestick anatomy, so make sure you watch the video to know the type of candles you want to look out for whenever you're buying or whenever you're selling. They are very, very important. You need to pay close attention to candlestick. Okay, I will check for what the language of the market is saying, and then be able to look for a buy position. And then in order to determine my TP, I use structures as well. I use structures. Okay, so I don't want to be greedy. I can actually take my profit around this region. So if I am taking the buy for here, and what did I have? I'll have my stop loss just slightly below this structure. Or if I want to be conservative, I don't want to be greedy with my stop loss, I can give the market breathing room and look at and leave it this way. Okay, so this is how I can spot entry, joining my higher time frame, the knowledge of what the higher time frame is telling me, and that of what the lower time frame is saying. Like I said, you should mark all your important zones on the higher time frame, be it your trend line. There is a concept in trading, the concept of confluence trading. There is a video on that. Make sure you watch them. You want to draw all your important zones. This is the daily. You can see that if I draw a trend line here, you will see how the market is actually respecting this trend line. And for every touch on that trend line, there is a massive drop to the downside. For every touch, sorry, this is volatility 25 index. Okay, we can also look at that. For every touch on those trend line, there is a massive drop to the downside. All right, so you should be able to draw all your important level on the higher time frame. Okay, you look at this particular zone as well. You see how the market is respecting those zones. So this is how important the knowledge of what the higher time frame and the lower time frame is, and this is how you should this is why you should understand what it's saying for you to solve some of the confusion you might have had before now. I hope this video is helpful, and you will do me the favor of hitting the like button and turn off the notification bar to receive more of this. Thank you for watching.